Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today, we're going to walk through the idea of my sell side equity research franchise as the example of the disruptive analyst. And I want to start with two compliments that I got. The first was that everyone read my stuff if they were on my list. And secondly, my competitors or competing analysts wanted to be on my distribution list. And this illustrates just how disruptive and unique my research was. So let's dig into how was I disruptive? And it started with a lack of investment banking relationships. The old line public companies that I covered in healthcare IT were not going to bank my franchise. So I felt I could be more independent and take a differentiated view to help the buy side learn more about the company. Second, I was laser-like focused on having differentiated research. I wanted my research to be so different from the competition that people had to call me and come learn my views. Third, I had a non-traditional background. I had grown up in internet e-commerce on the sell side, and I was taking this technology view to healthcare IT, a tech vertical that wasn't focused on technology, which made for a unique situation for me to become differentiated. And then four, it was the intellectual curiosity to actually pursue my independent thought and questions on why were companies saying certain things or making certain estimates. And then if you throw in the four traits of a good sell call, that allowed me to come up with four really great short calls. And the first one was eHealth Insurance, where the stock went from 22 to 10 because they were not the exchange provider that everyone thought they were. Then Cerner went from 72 to 48. And in this instance, they had finally broken their record of 60 straight quarters of beating and raising. And I felt that the technology was old and the business was going to start to be disrupted. The third was WebMD during the patent cliffs of 2011, where the stock went from 26 to 13. And then finally, when I wrote my white paper on digital healthcare in September of 2013, the pair trade I gave was the idea of to go long Dexcom in the 20s and short Weight Watchers. And for me, the key that made me different was just this focus on disruptive innovation when no one was focused on disruptive innovation. So with that, always be careful and watch out for that analyst who may have a very independent and unique way of looking things. You should listen to them. Thanks for watching, and I'm always here to help you with your capital markets, investor relations, and corporate finance needs.